Welcome to the daily insights that matter. India's per capita income in current terms almost doubled to rupees 1,96,000 when compared to the 2014-15 period. Now this is a remarkable feat. However, uneven income distribution still remains a challenge. Let's discuss this. Now the per capita income is a metric that helps determine the amount of money earned per individual in a nation. Now in simple terms, it is the average income of all the Indians put together. As per the NSO or the National Statistics Office's data, the annual per capita income at current prices rose to 1,96,716 rupees in FY23 from 89,796 rupees in FY2014, recording an increase of about 118%. Now when we compare this to a decade ago numbers, then the per capita income has risen by 144%. In real terms or constant prices, there has been a growth of 37% when compared to the FY14 levels. Real terms or constant prices means that the growth is calculated after removing the effect of inflation. Now most of this rise has accrued to the top 10% of the population, which in turn means that the median wages are falling and the inequality of income is rising. Now the per capita income dipped during the COVID period and has picked up in the last couple of years due to the improvements in health, education, economic and social mobility. Sustaining per capita income growth at about 5 to 6% per annum levels with appropriate redistributive policies will help sustain the current momentum. Additionally, balanced regional development will act as a catalyst for higher growth. Now the per capita income in real terms is rising and puts India in a great position globally. But the average income hides the fact that there is rising inequality. Rising concentration of income at the high-end income implies that the income for the lower and middle class have not been changing much and do not reflect prosperity. Despite all of this, India has overtaken the UK to become the 5th largest economy in the world compared to the 11th position a decade ago. Now, after experiencing around 14% growth in the month of Jan 2023, the momentum in auto sales has continued as Feb has witnessed double-digit growth once again of 16% when compared to the year-ago numbers. Now, the February auto sales numbers reveal growth across all categories, with three-wheelers clocking the highest growth of 81% when compared to the sales in Feb 2022. Now looking at the monthly trends, there is a marginal decline of 2.8% in auto sales in Feb 2023 when compared to the Jan 2023 numbers. With Feb auto sales showing a considerable year-on-year uptick, it is important to note that the total sales are still about 8% lower when compared to the pre-COVID levels of Feb 2020. The three-wheelers and passenger vehicles segment are the only two segments which have surpassed the pre-COVID levels as of February and as compared to the levels in 2020. Going forward, FADA anticipates robust auto sales in March 2023 on account of better availability of vehicles, clubbed with the occurrence of various festivals such as Holi and Ugadi. Additionally, discounts on vehicles due to the adoption of new emission norms from next month onwards is expected to further boost the sales this month. However, medium-term outlook remains cautious due to the challenges lying ahead, which include rural demand lagging urban markets, slowdown in private consumption expenditure amidst high inflation prints, etc. A better monsoon forecast is also expected to boost sales, and hence it remains a key monitorable going forward. So what does all of this news mean for you? India is poised to remain the fastest growing economy in the world despite the global headwinds, uncertainties and debt crisis faced by the other countries. But the internal challenges of income inequality need to be addressed properly. This will therefore have a neutral indirect impact on you. The robust growth in auto sales augurs well for India's economic revival, but we remain wary of the weaker monsoon and muted demand ahead. This will therefore have an indirect positive impact on you for time being. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.